You know, there is a lot of importance which is centered around the fact that 24,000. What is that in terms of the market? Is it psychological? Is it technically important? The fact that we've gone below 24,000 on a Monday morning when the world is not a scary place, which means that the local setting of the table is not something which markets are particularly happy about. The local setting on the table is earnings are bad, upgrades are not coming in, FIs are selling, and large IPOs have sucked out a lot of capital. If that is the setting on the table, and if technically the tailwind has become a headwind, which is flows have moved against us, how does one really realign the portfolio? And for a trader, is it time now to convert from long to short? So Kunal, first, what is the importance of 24,000? Is there an importance first?
It's a very significant level. So not just in terms of the data point or the psychological mark of 24,000, but the chart which we have for the index, which will tell you that from that last year when we were, when the Nifty was 18,000 levels, from there was a classic channel pattern which was being seen on the index. We've broken that level for the index, which means that the entire 8,000 point rally or more than 8,000 point rally which we've seen in the last 12 months, that is now on the verge of being retraced or reversed. Now that may sound a lot more ominous, but then on the other hand, what we are seeing is signs of strength as well as weakness across sectors. So we're discussing this offline that the Bank Nifty so far has been one of the strongest sector in this leg of correction for the index, which is very rare to see because Bank Nifty, as we all know, that has been a huge underperformer. So when a Bank Nifty outperforms the benchmark indices, it shields the market, gets into a very vicious kind of a correction to a larger extent. The only second leg of correction which could happen, so this is the sectoral contribution, Nifty Financial Services and Bank Nifty are the ones which are outperforming so far, or at least on a positive note in this last 1,000 point correction, as compared to the weakness in the autos, FMCG. These are the sectors which have underperformed significantly.
And so the correction is about 5% plus, right?
Yeah, 5% in this last leg.
And then the Bank Nifty has not fallen at all.
Bank Nifty has not fallen the last 1,000 points.
Yeah, it's not fallen. I mean, the collateral damage has not been there.
Absolutely, negligible.
Okay. So your view is that if the Bank Nifty stays where it is, then the market could make a base, it could bounce back.
Yes.
If the Bank Nifty collapses, then we are looking at significant and a meaningful downside in coming days.
Correct. So ideally what happens is, Nikunj, that the first put of call is the 200-day moving average. Why we believe that it's very important parameter? Because stocks, they benchmark their returns closer to those long-term averages. They act as magnets when stocks go into aberrations or excessive or euphoric kind of up moves. So, in this case, for example, 23,400, 470 to be precise, is the 200 DMA for Nifty, which means even if we fall by another 200, 300 points, it could just be a mean reversion to those averages. The second leg of correction which could happen is only if we fall below the 200-day moving average, and that could happen if the Bank Nifty starts to get into an accelerated sell-off. So, for example, we are at a point where Reliance is at sub 1300 levels. We are 15% below the 200 DMA for Reliance as of now, which means the stock is getting into an oversold territory pretty soon. So, the excessive sell-off for the index may not happen with the same sectors which could fall down further, but it should be with other sectors which are more resilient ones. If they start to sell off, only then we can fall further for the index.
So the punchline here is that watch out for the Bank Nifty, if not the Bank Nifty, the top 3-4 private names, ICICI Bank, HDFC Bank, maybe Axis Bank,
SBI to a larger extent, PSU. Yeah.
These 5 stocks, keep them on your screen.
Correct.
If they start falling 3, 4, 5%, that means we could look at significant downside.
Correct.
If they stabilize in the course of next 2 or 3 days, then we could be in for a stable market.
Correct. We may be in for a last leg of sell-off, but then mota I think we should hold on to that 23,500 level.
So the Bank Nifty holds the key. Top 4 banks will tell you which way the broader market and the tone of the Nifty would move. That's a fantastic analysis by Kunal. So 24,000 is gone, but don't lose hope yet. It really could be these 4-5 large cap banking stocks which would decide the next course of action.